Good morning. With the Nifty continuing to attempt to jump over the 5,550 mark, market participants large and small are getting uncomfortable. Besides the swings associated with the F&O expiry and the usual global cues, there appears no strong catalyst in sight to either break or make the market. After a flat finish, we are staring at a slightly soft opening today. Asian markets are mostly down following the overnight decline in the US stocks. Wall Street was hurt by lingering worries about the health of the US economy. All eyes are on today's housing data, which is expected to be rather grim. Investors will also look forward to Friday's revised US GDP data. Across the Atlantic, markets in Europe closed up, though Germany's benchmark index ended unchanged. Coming back to India, the non-index counters have been buzzing lately. The trend is likely to continue, but exercise caution on these counters. Large caps could see some action based on the news flows. While the overall bias for the Indian markets remain positive, do not expect great things in the near term. Having some patience, and you are bound to reap a rich harvest in the coming months. Thursday's F&O expiry could throw some light on the near-term direction. Global markets are witnessing some amount of volatility owing to concerns about slowing growth in the US and elsewhere. But Indian markets are more or less stable. Volatility has been low and trading volumes are picking up. Fund flows remain encouraging, although local institutions continue to caution. Some resistance is expected before the Nifty hits 5,600. Support is likely to kick in at around 5,400 if the Nifty slips below 5,500. The Nifty might go to hit 5,700 in the near term, but not without any hiccups. The FIIs were net buyers of Rs 3.18 billion in the cash segment on Monday provisionally, as per figures published on the NSE website. The local funds were net sellers of Rs 1.59 billion. In the F&O segment, the FIIs were net buyers at Rs 17.02 billion. The other news for the day is the Commerce Ministry has imposed value addition norms on export of petroleum and petrochemical products. Crucial changes to the FDI policy announced on the 31st of March have been stalled, with the RBI asking the ministry to furnish a rationale for the amendments before they are notified under the Foreign Exchange Management Act. The Prime Minister has assured the Orissa Chief Minister that the centre will expedite various projects in the state. The government extended soaps worth Rs 10 billion to exporters, particularly for the labour-intensive textile, handicrafts and leather sectors, to help them see through the fragile economic recovery globally. State-owned ONGC Oil and GAIL may make a joint bid to counter Vedanta Resources' $8.48 billion offer for majority stake in Cairn India, and have already got $10 billion in loan commitments from international banks for the move. IOB has raised its prime lending rate by 50 basis points to 12.50% effective the 23rd of August. Moving on to the recommendations, the technical calls are a buy on MLL. We recommend traders with high risk appetite to buy the stock above levels of Rs 54.50 with a stop loss to be maintained at Rs 53 for a target price of Rs 58. And a buy on Navneet Publications. We advise buying the stock in the range of Rs 54 to Rs 56.50 for a target price of Rs 62.5, and a stop loss is to be placed at Rs 52.50. The derivative strategies are long Syndicate Bank August future in the range of Rs 118.50 to 119.50 for a target price of Rs 126, and a stop loss is to be placed at Rs 115, and long Aditya Birla Nuvo August future in the range of Rs 839 to Rs 838 for a target price of Rs 862, and a stop loss is to be placed at Rs 826. Thank you and have a great day ahead.